Right now, your MetaMask wallet could have all of these different assets in a single wallet. So that mindset is shifting of how these are treated. And I think that that shift is a beautiful thing. Asset tokenization is a really, really important tech in the space, and it becomes an interesting challenge to marry the old and the new world, because dematerialized asset world is driven by batch processes, and tokenized world is real time.
In crypto, we all love to talk about legacy technology used by traditional organizations that we are disrupting. But there are a few old enterprises which in their pace of innovation and technological sophistication rival and exceed the most advanced DeFi solutions. Meet Nitin Gaur, a senior technology leader of blockchain and digital assets at IBM, who is building the hardcore infrastructure for the future of blockchain and finance. Nitin, it's a pleasure to have you with us today.
Thank you, Boris. Really glad to be here and really glad to reconnect with you.
Welcome everybody to Starbucks Interviews, a video series where we bring industry rock stars to discuss the future of crypto, tokenization, and capital markets overall. We are your all-time hosts, Boris Pekalov and Ross Shemaliak, co-founders at Starbucks. Please don't forget to subscribe to this channel and turn on notifications so that you don't miss other fantastic interviews we have with people from stock exchanges, from law firms, from regulatory authorities that provide you with an edge in understanding the technology and when the industry is moving. And now let's go to the interview itself. Nitin, please tell us about yourself and your activities.
No, that's great. Boris, again, thank you so much for having me. My name is Nitin Gaur, and I serve as Director of Financial Sciences and Digital Assets. I also founded Blockchain Labs and Digital Asset Labs in IBM. And this is the serving the financial services industry and various industries that we serve in making the journey to blockchain possible from an enterprise perspective. So that has been sort of good. I've been at this now since 2012. So it's been a long journey, but a very exciting one, of course.
That's glad to hear. And you say that you help companies with their transition to blockchain. What are the main challenges that enterprises face when actually going into blockchain?
So there are a few technical and business challenges, and I'll give you an example, right? And so the technical challenges are the systems that we have built, the business process management systems, or the batch processing systems that the financial industry runs at. So when we do things like transfers between multiple countries, between multiple banks, it's really a batch relay of these transactions, which is why it takes time. There's regulatory elements that go into it. And transitioning from batched relay systems to near real-time systems is a shift for back office systems to adapt to. And that requires a massive amount of investments, both in terms of people, technology, and time, to be able to make that shift, which is not an easy shift because the world works and it's a fairly massive amount of money that has been invested in the existing infrastructure. So the question becomes, how do we coexist with the existing world, which is fragmented, which is in many cases slow, and has its challenges with cost and intermediation? And how do we coexist that with the near real-time systems, which is cheaper, faster, better? And we have to sort of figure out as to how do we navigate that model of taking advantage of new technology, but also keeping up with the investments they have made in the old. So that's one problem, which is what we call as technical debt. The investments they have made, and how do we apportion new investments for new technology and taking advantage of it. Second thing is business challenges. Most blockchain networks, as you know, are driven by consortiums on their networks. So how do you create a model which allows not just your cohorts, but your competitors to come on the network and transact with you? Now you have data privacy issues, you have competitive challenges. You want to make sure that if I'm transacting, I'm not divulging more information about my customers, because I am trying to move assets. I am trying to transact with other entities. And those, to me, are bigger problems than technology problems, is figuring out how do you bring the entire ecosystem on a network, which essentially is a marketplace. It's also a competitive marketplace in many cases for the participants who are on the network. So I'll pause at that to see if that resonates at a high level, and we can dive deeper into as you wish in these two challenges.
Yeah, it would be interesting to discuss it further. And this is we actually often discuss more on the level of small and medium enterprise of what is happening or on the regulatory level, but we rarely hear insights about what happens in large enterprises, in their back offices. It reminds me about our interview, one of our previous interview with Douglas Borthwick from INX, when he said that the reason why exchanges like Coinbase or INX will replace New York Stock Exchange or London Stock Exchange is specifically the technical depth of which you mentioned. When you have so much investment, then the time it would take you to shift to the new infrastructure, it's the time that your competitors who are blockchain native will take in and actually overcompete the existing old companies in the same space.
Yeah, no, absolutely. I think this new evolution, which is why if you look at the valuation of Coinbase is so high, because the potential in the future is more bright. It's not just about X billion they've made or 1.8 billion they've made in one quarter, which was the last numbers that were reported, but it's the future of where they're heading. But at the same time, Coinbase also has a problem of attracting the existing customer base, the institutional investors. And there was another report which talked about this to say there are about 7,000 financial institutions using Coinbase's custody and their exchange platforms. So Coinbase has to also deal with the same problem because they want to attract the customer base, which is living in this legacy world. So there's a cross-pollination of those where you begin to see partnerships, you begin to see newer acquisition of companies who are in this new world, which I think is a great thing because it fuels innovation, fuels investment, and it fuels adoption of new technology. So it won't be a straight line of separation. There'll be a lot of cross-pollination between the new and the old, I think.
So probably generally what we're seeing is more bridges being built between different companies. And this is what blockchain requires, more collaboration between competitors now. And this is general shift in the business, I would say we see in the last few decades, when competitors need to collaborate and coexist. And even in our industry, there are many companies who are in some way competitors, but also partners, because we need to develop this industry together and increase awareness and share insights.
Absolutely. No, that's something which we'll continue to see. And I was doing some analysis. There are about 114 companies and counting who are in crypto custody business today, which will all happen in the past 8 months. There are 114 companies that are offering institutional grade custody and brokerage solutions, in addition to the big names that we hear on a regular basis, which I think is a fantastic story. And all this has evolved in the last 1 year. So innovation is really, really moving fast, I think.
That's an immense amount. We actually seen something similar with us in the tokenization industry. So there are literally dozens, if not hundreds of companies claiming to provide tokenization services and platforms. And this is good because it makes us think when we gather on our board meetings, what do we do in order to become different? Maybe we need to offer a turnkey solution. Maybe we need to focus on specific industries. Maybe we need to do some hardcore DeFi integration that would increase the liquidity of tokens. So we are having a lot of these back and forth conversations with us to find our way into differentiation. On the other hand, what's interesting is that we don't often, when speak to clients, hear about them comparing us to other companies. So the potential of the industry is so vast that what you do, even when you have dozens of competitors, is not that you take a market share from other companies in the same industry, but you instead expand the industry overall.
Yeah, no, absolutely. And then industry expansion, and you rightly said that. There's truly an expansion of the industry going to institutional areas that eventually, I think this year was a tipping point of institutional investors coming and having the equal footing as retail investors. So the whole Reddit movement around Robinhood and stimulus check that fueled common people to be able to start dipping their toes into crypto. We've seen an equal footing from institutional investors in the past 18 months, which I think is also terrific because that generates awareness, that elevates, because institutional requirements are much more stringent from safeguarding and regulatory compliance perspective, which is not a bad thing. I mean, people oftentimes label compliance, but compliance is really meant to safeguard me and you from fraud and from wrongdoings, and that still happen. But imagine if you had no compliance, this would be rampant, right? So I think that's an important distinction to make here.
Yeah, we actually saw during the ICO craze what happens when you have no compliance.
Exactly. And so compliance is important because it's meant to protect common people like me and you. But yes, it has a cost of safeguarding those things, and institutions coming into it accelerates that adherence to compliance.
Yeah, because
I believe one of
sometimes, sorry, Boris, public investors do not understand where and why they're investing. For example, ICO boom shows that 99% of all the projects were fraud, and it is very difficult to differentiate a good project between a bad. That's why regulation must be on the market.
Absolutely. I couldn't agree more. And many of them got away with it too. I mean, it's decentralized world, and 99% is the right number. Not many, I think there were just 2 or 3 who were made example of, but not many have, they've gotten away with it, I think.
although one of the biggest promises of blockchain is that we can put this compliance on chain and automate it, because the problem is that, and why compliance is called a problem, is because it's expensive, because you need to spend money on lawyers, and it may be hundreds of thousands of dollars, which for startups creates an entry barrier and stifles innovation. So creation of the infrastructure where compliance be built in, it's a great thing to facilitate access to capital, access to innovation for companies working in highly regulated industries.
Yeah, no, absolutely. Cost of compliance is always cited as one of the most expensive parts of crypto market. And a lot of people question that if we are moving crypto into the enterprise space and you're doing everything that we did before, what advantages does crypto have? I still think there are many advantages, especially from shrinking time in processing transactions and opening up markets is a big advantage. That can still be done in a compliant way. Inducing trust and removing intermediaries is still can be done in a compliant way. So there are many, many advantages. And yes, it adds a little cost, but that cost is there to protect the system.
We've seen for some time, actually, a wave of disappointment in enterprise blockchain because things were not moving as fast as many probably expected. So, and many have called blockchain a solution without a problem even. So now in 2021, do you see a demand for blockchain again and other applications outside crypto, which is a blockchain native space?
So it's really interesting you mentioned that, and that's true. I think I've seen the same evolution with internet. When internet was up, and we would tell our clients, look, you can move, transfer files faster. They would question, okay, how is this going to affect my business? Well, we removed all the information brokers, but it took almost 20 years, right, to get to that point where we have now Amazon, we have Baidu, and many of the global companies doing commerce. Back in the day, you had the rise of internet and you had a fall. So it's an evolutionary cycle, I think. And I think that you begin to see a massive investment from financial services. Every large bank has made investment into either a custody solution or a payment solution. That is enterprise use case. So I think in many cases, there's a tendency for experimentation, which is what the first phase was. The investment that came from the enterprise was in POCs and creating pilots and creating networks. And there were no immediate effects of that, because they were still in pilot phase, and the businesses retracted their investment because they wanted the technology to mature. And now it's come to a point where you begin to see the markets, the crypto markets being evaluated in trillions. Suddenly it has the market depth, but it also had the attraction of investments from crypto, from the financial services and the adjacent industries to make that investment that's needed. So we begin to see a rise in enterprise blockchain in 2021 and going forward, that they come back to say, how do I learn from what I've learned in the past failures and apply that to existing models? And there's a massive focus on, so if you look at Enterprise Ethereum Alliance, what we have done at Hyperledger Fabric, these are all public networks that we are trying to create a fence around so we can offer you enterprise services into this blockchain, public blockchain network as a utility. So think of this as a net internet, and you can create VPNs, and you can create private clouds, and you can create all these things to offer enterprise services. We begin to see that shift now into many of the public networks that are emerging. So it's an exciting time. I think enterprises have finally got the solutioning in layer 2 solutions in creating these models, which I think is only going to rise exponentially, if that makes sense.
So Zlatin, you mentioned is that what we basically are seeing is a creation of so-called some kind of a financial internet, when you have many blockchain networks related between each other, but we also have, I assume, the problem of interoperability. And especially if not everybody is using Hyperledger for
Right.
their blockchain solution, it becomes even more complex.
Absolutely, and that interoperability is at both level, at business level and at technology level. So technology level interoperability, you begin to see now projects like Cosmos and Polkadot and OneChain and all these guys trying to bridge the gap either by providing a denomination asset that is a bridging asset between the two networks, or the wrapping, which is what you see with Bitcoin, wrapped and working with the network. So those are examples of what the industry is trying to do from bridging the technology gap. But you also have to look in the DeFi space when you have DeFi, which is sort of Lego block, and DeFi itself is a big movement, which is bringing different asset classes. But traditional financial services industry is sort of siloed or a swim lane by asset classes. You don't mix the two asset classes because of regulation and because of compliance requirements and because of the way the businesses operate, the business unit operates, the line of business operates. And all that is changing now because in DeFi, in your wallet, you could have a debt, you could have stable coins, you could have payment instruments, you could have Bitcoin, you could have a collateralized debt position, all that in a single wallet, which traditionally was not there. I mean, if you look at your own bank account, people have 401ks and they have mutual funds, they all are separate accounts. Right now, your MetaMask wallet could have all of these different assets in a single wallet. So that mindset is shifting of how these are treated. And I think that shift is a beautiful thing because it's changing the way we do things.
So you mean that the problem of interoperability is not only the technical problem where you can build technical bridges and it's not a rocket science, it's possible, but also the problem of how financial institutions are organized and how they treat. Yes,
absolutely. Because the thing
that's
is,
a very interesting insight.
Yeah, because the thing is that when I'm keeping a specific asset class, so let's say mortgages, right? Mortgages are a different asset class, or mortgage-backed securities is a different asset, or securities or stocks. They all are managed by different departments because they have different reporting requirements. They have different legal requirements. You have less problems with, let's say, real estate assets, but you have more reporting requirements from corporate actions and buying and selling. You actively buy and sell your stocks, but you're not buying and selling your house on a daily basis.
Yeah.
So the transaction volume is higher. And so how do I maintain, so every big financial firms has many departments because they have to maintain a certain structure, deal with the transaction volumes and regulatory, and that is sort of non-existent in the crypto world. Everything is a wallet, everything is a token. So a token is a token is a token. Now, driving that into how it fits into enterprise is something which is a challenge, but also an opportunity, I think.
You previously mentioned about the internet and the first steps of the evolution. And currently, not many people really understand how internet works, but they're using it every day. And it is something with blockchain.
Yeah, and you know what? I wrote a paper on this topic in drawing analogies between the blockchain stack evolution with internet evolution. So back in the day with internet, there were companies who were providing more efficient file transfer, or more efficient compression. These were unicorns, but they don't exist today because the industry matures. Right now, the only internet companies who are unicorns are Amazons of the world, who are providing a business service connecting the various wires or various connections in the internet to connect the suppliers and sellers and shippers, and they're bringing it all together as a platform. So the platform thinking, which leads to co-creation, is something that will also be the unicorns in the blockchain world, which today our focus is in layer 1 and DeFi, which is still the very basic layers, which to me is back in the day with TCP/IP and with the various protocols that came that made commerce possible. But we have not seen the unicorns yet. It's still a long way to go, I think, for the next generation entities or the crypto banks to form and give you a singular service like a stop shop for everything. I would like to go to a crypto bank for one-stop shop for everything. And that would be a unicorn, I think, that will be born.
Yeah, that's why we are building in Stobox one digital assets ecosystem, which includes the asset tokenization, crypto exchange, NFTs, etc. So one-stop shop for the customers, not to spend a lot of time communicating with different entities, with developers, with marketing team, with lawyers. So we bring it together and provide the services for our clients. And regarding the blockchain solutions, one of the questions that we are facing, it is about how to choose right blockchain, public or private. What is your thoughts about it? And do
Yeah,
you really believe that public blockchains such as Ethereum will be adopted from big institutions?
that's a really good question. So there are close to about 800 plus chains. We know there are about a dozen chains that are popular. So of course, Ethereum and Bitcoin take the cake. You have various protocols. The Hyperledger Fabric has about 15 projects trying to solve some problems. Then you have Algorand and EOS and Trons and BSC, and you have all these sort of Binance chain, a handful of chains that are. The way I have viewed this is I don't want to choose a blockchain because it's popular. Like Ethereum is popular, but it's expensive to do business on Ethereum now.
It's
The
true.
cost of coins have, and so the popularity of Ethereum has led to a problem where the utility declines because it's too expensive to do business there, right? And that is a problem. It's a problem for Ethereum itself, even though it's valued high in the space. But I actually look into this as what I want to achieve from a business problem. Like if I'm launching a token, what is the objective and what I'm trying to achieve? And based on those design criteria, I will pick a chain. So for example, NFTs is another flavor of the month in the crypto space, but it's an important evolution because it will truly democratize, it will truly make the crypto retail. That not many people may understand DeFi or Ethereum, but people love basketball, people love baseball, people love sports, and they want to have something that they can remember that they like. And that's retail mentality. That you may not know nothing about crypto, but you can log on to a website and buy something that's yours and you enjoy it. And that's owning crypto at the end of the day, right? So that is an important movement, but I want to figure out what design it is, because if I'm offering a service which I have to pay $500 simply to make a transaction and transfer a top shot of my favorite athletes into my wallet, then it's expensive for consumers. Then I cannot appeal to all strata of society. But I want to go with maybe like what baseball cards did, $4, $3, $5, $10, $100, appealing to retail. So I cannot do that with as expensive cost as Ethereum is, and that's mostly recent. So I will pick a chain that provides me to give this, because at the end user doesn't care. You don't care when you go to ATM which technology they're using, which network. You just need your money. You don't care when you go to, so the protocol wars will eventually settle down because there will be a better interoperability of movement of asset between, and there'll be a entity, the layer 3 protocol, for example, that'll provide a lot of interoperable function either at the business level. And that is where I think gets exciting. But I'm not going to be a maximalist and choose one over the other. To me, I look at consensus protocols that has the potential of future inflationary pressure on the currency. I look at the security technology underneath the covers. I look at what is the global footprint of the mining and hashing power. So I look at these technical areas to say which one do I choose, because I also want to choose a blockchain that has longevity to it, that has life to it, which Ethereum certainly does. It's been in the business for a long time, and many of the like Algorand provide a good structure because they've been in the business for 6+ years. But if someone comes tomorrow and offers me a good chain, they may have good tech, but I don't know if they've proven themselves. So I look at these things, which is a design criteria for me to launch a project, for example.
Yeah, because for many users, for example, or companies, decentralization is very important. And for example, currently we see a lot of crypto enthusiasts and crypto anarchists that are believing in the decentralization, and they are ready to pay higher fee, but feeling that they acting in decentralized space. Moving to the topic about the tokenization. So how do you see the future of digital assets in general? And what will be the main use cases, and what level of adoption will they reach?
So to me, asset tokenization is foundational. In fact, 5-6 years back, I put this in my research agenda in a big chart. Asset tokenization is a really, really important tech in the space, and it sounds very simplistic, but it's not. And I explain this, right? Tokenization happens naturally with most of the proof of work and proof of stake. And these are native tokens. Native tokens that provide utility to pay to play. It's like you go to a theme park, you get tokens to ride the rides. So you need those tokens, and Ethereum, Bitcoin are perfect examples. And these are tokens, but you also have the notion of creating tokens of physical assets or tokenizing the dematerialized assets. So when I say dematerialized assets, this is your stocks and your bonds and securities that you get from Wall Street. Remember this, right? There has to be a linkage. So if you're tokenizing a house, that linkage has to, or tokenizing a car, when you sell a car, the token has to move with the car. So when you tokenize a physical asset to the physical or digital token, you have to make sure you have the right technology to reflect the movement of that asset. And it's not just a simple digital representation. So that's point number one, which is hard. So we use we use business process methods to say you need so many digital signatures and you need previous owner, new owner to sign this, and that's only when you can move an asset. And then you have IoT technologies and supply chain to move containers and move things of value, and you take the IoT and you put them in blockchain, and that's how. But it's a complicated topic. But when you look into dematerialized asset, which is the space in Wall Street and investment banking industry per se, then I think that it becomes an interesting challenge to marry the old and the new world, because dematerialized asset world is driven by batch processes, and tokenized world is real time. So when you're moving real time token and you're still relying on the system that maintains a record of Boris's ownership of the asset and Boris moving to Ross, and this is happening in real time, this should also be in real time. Otherwise, there's an information gap between the two. That is a challenge that asset tokenization systems need to solve. Does that make sense?
That's definitely making sense, at least for public securities. But I would say even the biggest promise of tokenization is on working with private markets and private securities. You mentioned very well previously that currently for the last decade, the blockchain community has been focused on building solutions for engineers, on building the infrastructure for blockchain. And I believe, we came to doing what we do specifically with the view of mass commercialization of solutions that would be used by common business or a common user and a person. And you mentioned that NFTs are such a kind of retail solution, and that's definitely true. Another kind of, I believe that tokenized securities are another thing that should be a common retail solution and access, because currently you have only 0.4 of all companies in the world being publicly traded on stock exchanges anywhere in the world. It means that in 99.6% of the companies are inaccessible to be invested in. And this is a problem because these are companies we face every day. It means that these companies are limited in their capital and opportunity to grow. And this is when capital provides greatest return, not 8% annually, but it may be 100% annually in the growing early stage or middle stage business on one side. And on the other hand, it's opportunity for such businesses to build a community and for us to participate. Each day when I go to the street, I shop in the coffee shop, or I buy some clothing, etc. I interact with businesses that are part of my life. And tokens are also a part to become a part of these businesses and their community, to be a part of the narratives and the world they're building. So I believe tokenized securities are, on one hand, a big way to increase access to capital for businesses and unlock private markets, but also a retail product in a sense that they create a link between businesses and the community they are serving.
No, I think capital formation, and you cited some really impressive statistics, right? That it's why it is important. So there's a work that's happening with something called Global Digital Finance, GDF. You should look into that, and you should certainly take part in that. It's an open sort of community of like-minded people who are coming together to bridge the gap between private equity. Because private equity is a largely illiquid market, and it's not exposed to everybody, right? It's not truly democratized. So there are platforms like Onera and Vertalo who are trying to get that space of managing cap tables. Like if Boris has a Storeblocks, for example, wants to raise funds, can you not take that business directly to this sort of marketplace, still remain private, and attract investment community, which is what historically the angel investment, angel list republics of the world have tried to do in exposing that to it, but that's still limited to accredited investors, which means that not everybody is making $300,000 a year to participate in the private equity space. How can you democratize? A farmer in Uganda can risk his $100 of a yearly saving and take advantage of the growth in the small and mid enterprise that is high growth industries, right? Yeah, there's a risk to it, but you can still venture out with $20 or $50 or $100, and you open up a much larger market to 7 billion people as opposed to just a few million who are rich. So rich keep getting richer because of the access to these investment opportunities and access to these capital formations options, including the mature markets from a capital markets perspective. But then the majority of people who are not in that space should also have at least some piece of that pie of growth. And I think, to me, there's nothing better in going that space, as you mentioned, Boris, is very attractive. And I think we as a community should do all we can to enable that platform, exactly what information has done, what internet has done for information, which everybody has access to the same information. Also misinformation, that's true. It has created that whole problem. But we would like to see a platform that does the same thing for opportunity for financial services, or things that we value, not just money and investment, but in future truths and information and things that, so all the things that we value, or I value truth, I value trust. I trust Boris, and let's say, for example, on social media. I will not consume bad information because blockchain prevents you from, the incentive economics prevents you from consuming that information, for instance.
That's very interesting that you mentioned DGF. We actually just recently joined the organization to also participate in the digitization of private markets. And very interestingly, this is a matter in which non-US countries may be actually superior. Because, for example, in the EU, you can raise up to, depending on the country, between 1 and even 8 million without going through complicated procedures of registering your offering, and retail investors can participate with small sums. So actually, I wonder to hear your opinion on whether what is necessary for this tokenization to happen on a mass scale and to really create access. Is it only the technical infrastructure, or is it also a legislatory change? And what is necessary for this change to occur for regulators to allow small investors to participate and to risk their money?
Good question, right? So two things. One is you see a lot of projects happening now which are helping with tokenization, and you don't have to be a technical genius to do that anymore. And there was an Enterprise Ethereum Alliance conversation yesterday where you find many of these projects who are coming up, which lets you, and I think even some of the platforms, the OpenSeas and Wearables, they have built a marketplace that lets you scan your art and make it NFT, for example. It's still very, very basic and rudimentary level. To me, two things. One is making it easy, just like you going and buying something on Amazon. It should be as simple as creating a marketplace where I'm offering a token, you're buying it, and there's a trust mechanism built into it. So someone needs to verify, validate as a first induction of that asset in the system. Second thing is enforcement. This is something which I've been thinking about for 6+ years. I think you can still have regulation at the endpoint level. So if I'm in the United States, and let's say you happen to be in Philippines, Philippines should govern and control who can buy what and sell what, because it's a sovereign part, and you can never get past that stage. But the infrastructure to move assets from the United States to Philippines is there. Blockchain provides, and that's today there with Ethereum, Bitcoin. It's a global transaction system, and you simply connect to the endpoints using a wallet. And so the question becomes that enforcement of movement of assets should be an endpoint, which means if I'm moving an asset from the United States to Philippines, there should be a system that does the verification validation. Am I allowed to do business in the Philippines? Is the person not a terrorist, and all these things that have to go with it, which is the regulation part of it. And there has to be some verification validation. And when you send the asset, before the asset gets into your wallet, there has to be some entity that may do an additional verification validation to make sure there's some trust built in the system. It doesn't have to be an entity. It could be a smart contract. It could be a gated structure which demarcates certain asset classes that goes into the whole thing, which means that if you feel that an asset class, which is true for ESG, is detrimental to society, you can ban those asset classes in a country. So for example, if you're selling a pork futures. In Islamic countries, as you know, pork is banned and it's not considered right. So you can have a restriction or demarcation of that asset class only because it doesn't conform to the moral folkways of. And so you need to have the system built in, and it's important. It's important at a social level. It's important at a governance level. But blockchain will be the big sort of a global infrastructure that connects various countries, which is an important part too. So that's what I'm thinking from this perspective. Think of the social networks, but with a lot more visibility and transparency for moving things of value.
Really need something like a regulatory layer on top of at least financial blockchain solutions that take into account requirements in different countries and which is tied to identity. I feel the big missing link is actually an identity infrastructure so that you won't have to pass KYC AML each time the transaction is done, but a shared ledger when this would be stored. This is severely lacking, I would say.
Yeah, I agree. And that's why I think that if we are focusing on anything in this day and age, for this to really take off, digital identity and digital verification are two technologies that should be a massive focus. Because I think in many cases, that's something that a country issues driver's license and passports should be able to issue it, and that becomes a natural KYC object on these networks. So you have solved the natural KYC problem, like, look, I'm issuing an ID that's issued by the state, and I can verify, validate that there's an issuance mechanism. And then countries can have their own smart contracts for all the assets coming in that can be filtered out. So that way they don't have to have a massive governance infrastructure. They can simply roll out smart contracts and update smart contracts based on the changes in government and so on and so forth. I think that'd be a good model for us to follow. And like today's financial system, there are loopholes in that too. Like if I'm a citizen of two countries, which is possible, then if something is banned in one country, I can still own that, go into a different country and accessing it from that country. And that still happens today. I mean, I have a dual citizenship. I can open an account, let's say in India, and I can open in the US. Depending on which jurisdiction I have, it's not illegal. It gives me an option to do it. But as an American, of course, now with FATCA and all these other rules, I cannot participate in certain crypto offerings. Yeah. And that's something I have to just live with. Right?
Yeah, because you're restricted.
That's right.
Yeah, coming back to a discussion about decentralized finance application, does IBM want to venture into the wild space of DeFi solutions, given that the DeFi is about math and deep tech, and it seems like the space that IBM can dominate?
So that's a great question. So we are, in the sense that I'm part of the team which are looking into what can we do from applying technology from a perspective of doing payment analytics and fraud analytics on these massive, using GNNs, which is generative neural networks, to figure out the endpoint, like what wallets have been, what is the risk of phishing on your wallets? Like MetaMask is still a last mile problem. And if my browser is compromised, then my MetaMask is compromised in some cases. And how do I circumvent those challenges? So you're absolutely right. I think there's a lot of technology behind the scenes, and given our legacy with cryptography and fully homomorphic encryption and blockchain and scalability technologies, we are aspiring to be the dominant player in the space, both from infrastructure perspective, but also from devising new instruments. So we have, at least my team has 3I strategy. The first I is infrastructure, which is custody solutions and cloud and what we're doing in making the nodes easily available, accessible, providing scalability technologies, encryption technologies. And then the next I is instrument meaning how do you create asset tokenization for stable coins or central bank digital currencies or digital securities. And the third I is insights, which is an important part for market data, but also an important part that you need, which is all the AI and machine learning domain to apply for things around financial crimes analysis or doing business analysis in terms of which asset is active. So you need a bunch of things that do the analysis, which today, if you look at CipherTrace and chain analysis, elliptical, these are companies who are providing the public networks, but most enterprises need something more from making a business decision of buying and selling, but also making a decision of risk and valuation, which today is not non-existent in the space. So you're absolutely right, and we aspire to play in that space.
And as any decent DeFi company, are you going to issue IBM coin?
That's a very good question. And you know what? We have internally done that. Like many of the banks, like I know BNY had the BNY coin. inside of the enterprise as a way. So IBM, as a culture, we are an amazing company. We have this thanks award and blue points that we give to each other. So if you're helping me, I don't have to go to a manager. I can give you a thank you with blue points, and blue points have value. You can go to marketplace. That used to be Blue Coin back in the day. And we move, so, we're not going to issue a public coin because we're not in that, we don't have the incentive economics, so we're not in that space. But inside of the company, we have many experiments that go on in issuing, internal tokens that we can transact with each other to thank each other. So we all have a little pool and a little wallet. And as a manager or as a employee, I can reward each other without going through a management chain, which creates a culture of collaboration. So I can, if I give you 50 points, those 50 points are worth $25, and you can go to marketplace and spend those 50 points to buy yourself a t-shirt or a blender, or use them, collect them for some time, and you can buy yourself a trip if you get enough of those points. So we already have that, I think. We're not calling
Man,
it
that sounds just fantastic in terms of encouraging collaboration. That sounds very cool. Nitin, thank you for the fantastic interview. Thank you for the insights and the energy you brought with us. It was a pleasure to speak with you.
No, Boris and Ross, thank you so much for inviting me. I enjoyed the conversation, and I wish you and Stopbox all the luck in moving the agenda forward and moving the needle forward for the industry.
Thank you. Thank you a lot.
Thank you a lot. And to all of our viewers, please don't forget to like this video if it was exciting for you. Share it with anybody who you think may also like it and enjoy. And don't forget to subscribe to the channel to see other fantastic interviews that we have. Stay tuned and see you in the next episode.